Welcome to Kalkine TV, top news of the hour. I'm Sage. And Nuix Sezzle shares has hit record lows. It's been another rough day for Nuix shareholders after the data business hit a record low of $2.16 on Wednesday. And on Tuesday, the group warned investors that rising costs meant its pro forma EBITDA for the first 4 months of financial year 2022 is expected to finish down on the prior comparable period. And the buy now, pay later sector is also struggling again today. Sezzle shares hit a 52-week low of $3.85, with Laybuy tumbling to a record low of 27 cents. Shares are under pressure after Fed Chairman Jerome Powell surprised investors overnight by saying he expects the US Central Bank could taper its emergency bond buying program faster than previously flagged. And moving on now to the next news, covering dramatic slowdowns in the Australian property market. The Australian housing prices have been breaking records since the outbreak of the COVID-19 pandemic, making it more expensive for first-time home buyers to purchase their dream home. And while property prices continue to remain at the upper end of the curve, the housing market is showing some evident signs of slowdown. The latest data suggests a slowdown in the property price growth of major capital cities, including Sydney and Melbourne, where prices increased by 0.9% and 0.6% respectively. The deceleration in price growth emerged as the number of homes listed for sale kept increasing. And over recent weeks, stock levels have become far more normalised in these capital cities, while stock levels across Melbourne are sitting at 7.9% above the 5-year average. The total listings in Sydney were at just 2.6% below the 5-year average. And on the flip side, Brisbane and Adelaide recorded the fastest pace of growth in November. The home values in Brisbane were 2.9% up in November, highest since October 2003, while home values in Adelaide were 2.5% up, highest since February 1993. The divergent trends across these capital cities were due to different supply dynamics. And interestingly, the slowdown in property market conditions was less evident across the regional areas, where the monthly pace of capital gains has improved over the last 3 months. And from a capital growth perspective, regional New South Wales and regional Tasmania were the standouts. Now lastly, China's factory activity unexpectedly picked up in November, growing for the first time in 3 months as the crippling surge in raw material prices and power rationing eased, taking some pressure off the manufacturing sector. The official Manufacturing Purchasing Managers Index, or PMI, rose to 50.1 in November from 49.2 in October, and data from the National Bureau of Statistics, or NBS, showed on Tuesday. The 50-point mark separates the growth from contraction, and analysts had expected it to come in at 49.6. The world's second largest economy, which staged an impressive rebound from last year's pandemic slump, has lost momentum in the second half of this year as it grapples with slowing manufacturing, debt problems in the property market and COVID-19 outbreaks. Thank you for your time watching this report. Please keep watching Kalkine TV for further market updates and expert talks. This is Sage signing off for now.